Hello everybody, this is Anthony for Investors Underground. Today, I have an opportunity to speak with one of the outstanding members within the Investors Underground community. It's my pleasure to introduce Mr. Stan Ivanov. Stan built a successful career as an information technology professional. He began trading in 2008, and by 2009 was a member of Investors Underground, making him one of, if not the, longest-running IU members. Stan, who's also known in the IU chat as Godfather, is widely regarded for his willingness to share wisdom across a number of topics related to trading, from entries to trade management to navigating the mental aspects of trading. Today, we'll get a chance to learn more about Stan's trading journey, and he'll share what he believes are the key factors to becoming and remaining a successful trader. Hello, Stan. Thank you for being here and taking the time to speak with me today.
Hi, Anthony. Thank you for having me, and it's the pleasure is all mine, to be honest. This is great.
Stan, there's a lot of topics that I want to cover. I definitely know a lot of the Investors Underground members have a lot of questions, and I hope to channel some of those questions. But maybe we could start with just something basic. How did you first get interested in the stock market and trading?
The first time I was introduced to the stock market was early or mid 2008, right around the housing bubble and then the eventual pullback, right? So I remember back then that's also when I started my corporate career within the IT field. And I remember being in the back of the shop, and one of my best friends, to this day, he pulled me aside and he said, "Hey, look at this thing right here, right? You buy 100 shares of this company. It's at $2, and then in a couple of days it goes up to $5, and you have 100 shares times $3. You make $300." And I looked at him, I'm like, "Is that it? I mean, what's the catch?" He's like, "Well, you got to pay commissions and this and that, but that's it." And I was like, "Well, how hard can this possibly be? I mean, we're working in IT, we're solving all these complex problems. This got to be a piece of cake." So that is the very first time I actually, was exposed to trading. I think my first trade on SPY, at the time, SPY was around $63, $65, I think. It was sub 100 for sure. And from there we started looking into the usual stuff, right? How you usually get attracted to the market. You see, back in the day it was just forums, right? There, Google forums or Yahoo forums, and then you read, and this company went from 20 cents and it went to whatever, $3, and naturally, when you think about a missed opportunity, you always apply your full account size, right? So you're like, "Man, if I had $1,000, I would have made 100K." So naturally, when you think about a missed opportunity, you apply full account size. But then when you put on your risk, it's always a partial, and that's one of the battles there for new traders. But that was the beginning. That was the very first time. Up until that point, I had no idea what a share was. I didn't even know that's what companies did as far as issuing shares. For me, it was all of this. You buy something and then you hope for it goes higher, and then you sell. And I remember to this day my very first trade. Bigger trade or biggest lesson, I would say bigger lesson was in a company called HEB. And it went from, I bought it at like $1.30, and it went to $5, and I'm celebrating, and already spending the money that I haven't realized, right? Only to then, 2, 3 days or a week later, watch it go not only to $3 to two to one, but I actually sold at a loss. So it's that those were the humble beginnings. I think I have not met anybody that has not gone through it. It's almost a rite of passage, if you will, right? Um, and from that point on, it's just been little by little, um, and that was my very first exposure to the market.
How did you learn how to trade after some of those beginner sort of lessons that we definitely have all experienced, that just like you mentioned is sort of a rite of passage? At what point did you start to really pick up and learn the ins and outs of trading in a more systemic or in a more advanced sort of way?
I would have to say from day one, Anthony, and for that, I think I need to give a little bit of a backdrop into who I am and how I operate. I was born and raised in Bulgaria, Eastern Europe, and I moved to the States in 2000. Summer of 2000 is when I moved to the States. But in Bulgaria, it was not enough to be the smartest, right? It was not enough to be the best at something, or to be the hardest working. There's just so much competition that if you had straight A's, somebody had straight A pluses. If you got 95% on the test, 10 other people got 100%. So that from a very young age had instilled in me a particular way of behavior, a particular way of the need to succeed in whatever it is that I'm doing. And I think by who I am, my mind, it's I'm an engineer by mind. That's how I operate. Um, so I believe that I spent at least 6 to 7 years doing the right things, learning, making mistakes, making small mistakes, making big mistakes. And then eventually just learning and understanding, how do I figure this out? Right. It's my mind has always been curious. The first time I've ever seen a computer was in 2001. I remember 2000. I remember for Christmas, my parents bought me a computer for Christmas because I needed it for school. And from that point forward, it was so fascinating to me of, okay, here's this thing, and you type some stuff, it goes up on the screen, then you can print it out, and then you send these emails, and then chat system, etc. So I have always been a person that likes to break things down to their most fundamental building block. The closer I can get to a binary outcome, the closer I can get to a yes or a no, the better I understand something. And my mind works with association, right? I use analogies a lot because that is just how I learn. That's how I understand things. In order for something for me to click, I need to be able to break it down to its most fundamental aspect. And I think that's why I've spent so many years in the beginning just learning, genuinely learning. I remember when I started paper trading, 2012, I think, or 2013. And that goes to show, I've been an IU member since 2009, and I didn't start paper trading until 2012 or whatever, 13. I've had real trades in between, but when I finally said, you know what, I need to learn this. I'm either going to learn it or not. I traded for a full year almost, paper trading, and every day I would wake up. I'm over here on the east. I'm sorry, on the west coast. I would wake up every morning, 4 a.m. market opens at 6:30. I'll do some trades. By 8:30, I have to go and, get to work every day. And the moment I realized that I was ready for prime time, for a real account, was the day I remember going into work, and I was so bummed out that I had a loss, that day on paper trading, right? I mean, I was so bummed out. I'm like, how can this happen? I did everything right. What's happening? And then I sat back and I'm like, wait a minute, this shit ain't even real. It's not even real money. Why am I feeling like this? And for me, that was it. I'm like, okay, now I'm ready, right? Now I'm ready to take the leap, because in my view, I had overcome this emotional barrier that's usually, you don't learn emotions from paper trading, right? It's all funny money. It's all fugazi. You don't learn anything. You can test the setup, you can test the strategy, but you just don't learn until you go through the emotions. And the moment I realized that these fake emotions had a real impact on me, then I was like, the only thing I have to do is just switch the account where it says paper trading to live trading. That's it. Nothing else changes, right? And as we know, you still have to go through the emotions once you switch to real money. It's very different, right? It's very different. I found IU in around the same time in 2008. Actually, I think back then it wasn't even called Investors Underground. I think it was called something else, Investors Live or something rather. But then I waited until they switched to the website, and then I signed the beginning of 2009. And I was on and off for a few years, doing my thing, but I have always kept my subscription. And then in 2014 is when I started to hit some consistency and profitability on a consistent basis, and things started to click into place. And from 2014 all the way up until 2019, I still had my corporate side as a primary job. And it's not that I wasn't ready to switch before then, but I still, to this day, have a passion for IT, right? I love it. It massages my brain. It makes me think. I'm able to solve complex problems. And it wasn't until 2019, though, that I switched to full-time trading. So when you look at it, I had almost a 10-year stretch of practice, in a way, right? Of trying to get it right. And I think, when I look back right now, for me, there was no other way for me to do that. It's how I function. I first must understand it, and then I can apply it. Because if I don't understand it, I can't apply it, and I sure as shit can't teach it afterwards. If you don't truly understand something, you cannot teach it, right? And it's really what transpired through the years in that way. And then as far as what was it back then? I mean, it was. I think it's tougher. I think it was tougher back then. I think commissions were really high, right? You had to pay, 10, 15 bucks each way. So that made you think twice before you executed the trade, which I think is part of the problem these days, right? Why some people start trading and you saw the 2020 crowd and 2021 crowd and buy the dip and close your eyes and you make money. I mean, right? It's who could possibly fail at that? But because of the ease of access to the markets, in a way, it removed that first barrier to entry, right? It removed that, I don't have to think twice before entering a trade because it's free. I can open up a Webull or a Robinhood account and I can just, go back and forth for free. You even get rebates, right? So I think because of that, it's a little bit tougher for the newer trader these days. Because it allows them to be lazy in the beginning. It sets up the environment for you to just scram up some cash and start playing around. Where I think, doing what I did, at least for me, is what built the core, is what built the personality, is what built the knowledge, the foundation, to then be able to continue to build on top of that. Because if you don't have a solid foundation, you're going to get to some point and it's going to start to get wobbly. And if you don't know how to emotionally handle it, it's going to come crashing down very, very quickly. Which I think is kind of what we're seeing today. And 2022 and 2023 so far, has it been easy? No, it hasn't. Hasn't been difficult. It's different, right? It has nothing to do with easy and difficult. It's just different. And until you decide not to fight it, it's always going to be different. So you have to adapt. You have to change.
Stan, one of the questions that I had for you was, what sort of characteristics do you think you had and still have, but particularly what you had at the start of your trading journey that allowed you to be successful where so many other traders, maybe fail?
I believe what sets me apart is emotional intelligence. I think when it comes to handling emotions, when it comes to remaining objective, I think that's where my strength comes in. I could be down 50K, I could be up 50K. It doesn't matter. It's the same thing. It's the same emotion. The only difference is how you experience it and how you portray it out to the world. Again, I like to break things down to their most fundamental block. And if I can do that, then I'll understand it. And once I understand it, then I can apply it. It is really what it comes down to for me.
How were you able to break down your particular trading style? How did you find your trading style? How did you find what works best for you? Was it a very systematic process like these other things in your life where you found, back testing and trial and error? How did all of that come to be?
I'm a very data-driven person, right? I enjoy data. I like what it says because to me, if the data is sound, right? Because as we all heard the saying, garbage in, garbage out, right? So the very first thing is you have to make sure that the data you're looking for is sound. Now, given that I'm a data-driven person, it's what has helped with my trading as well, because then I can find some back testing aspect. I can look at someone's strategy, like some of other great traders out there, and take little pieces, right, bits and pieces, but I take them with the intention of how do I make this my own, because you can't just take someone else's style and try to replicate it. That's not going to work. And I think that's where some of the problems traders have is they take someone's strategy and they're like, I'm just going to do that. Well, yeah, you can, but you can't take the strategy and say, starting tomorrow, I'm just going to apply it to the market, because it's not yours, right? You don't know what that person has gone through. You don't know that person's priorities. You don't know that person's financial status. You don't know their background or what they like to do or what they don't like to do. So that's a certain way for a disaster if you try and replicate someone's strategy one-to-one. Now, if you take it and you make it your own in a way of, okay, this is what it means at face value. What does that mean to me? And how can I extrapolate edge from that and then apply it to the market? Then yeah, then you can definitely put the whole little bits and pieces together, but it has to be your own. It has to be something that you when you look at a chart, when you look at a trade that you've made, it has to represent you for the majority. yeah, you can see other traders in there, okay, this is kind of what this person does, they use this trend line, or they use this whatever Head and Shoulders. But at the end of the day, the majority of that chart needs to reflect you as a trader. And and for me, as I have gone through, developing that, what is my strategy? That's what I had to do. I had to take bits and pieces, back test them, and make them my own. I could not just take something and apply it directly.
Where do you find edge in the markets these days?
I think edge in the market is you. You are the sole edge in the market. The market provides opportunities, right? That's what the market does. It provides the same opportunities for the same reasons, or across the board for everyone. Because what you see on your screen is what I see on the screen, is what the next person sees on the screen, etc. However, here's a trade. You took it and I didn't. Why? Right? Because it's not that the edge wasn't there. No, the opportunity was there. But because the way I trade, that's not my edge, right? That's not what I do. Maybe that's something that you do. So I think it's important to understand, my stance on edge and then market, right? So for me, the edge is something that comes from within, and the way I trade primarily is I'm a sentiment trader, and what does that mean? So I look for opportunities where sentiment shifts from one direction to the next. It could be something's been going up and now sellers are coming in and the sentiment shifts, or it could be something is going down, buyers are stepping up and sentiment shifts again. Now, there's many ways to describe that. You can draw trend lines and you can do all these things, and we can get into the technical and fundamental aspects later on. But for me, that is the basis of my trading. That is how I find opportunities in the market, and I apply my edge of behavior analysis, of pattern recognition, of fundamental analysis, of technical analysis, and then where do I see the sentiment shift? Because the way I view sentiment is I view sentiment as gravity. And when you think about gravity exists everywhere, right? Gravity exists here, it exists in space. It doesn't care who you are. You jump off a mountain, you're gonna feel it, right? Just like people are like, "Oh, I'm afraid of heights." Well, no, technically you're not afraid of heights. You're afraid of the consequences of gravity when you think about it. So I think that sentiment is that for me, that is my foundation, that is my core, right? That is what I go after. I go after sentiment change. It could be on the long side, short side, it doesn't matter. And then you have to have the right conditions for that to be developed. So I'll go with another analogy, right? Again, it's how I learn. It's how I learn. It's how I understand. So it's the only way I know. But I view the market, as a kid, one of my favorite activities was to watch motorcycle racing. And I was like, what, how can I break this down in a ways to where I understand it? So if you take, for me, right, I view the market as a motorcycle race. That's it, right? The market itself is the track and all the bikes around it. Each motorcycle that goes around the track, that's your ticket for the day. That's the company you're trading. That's whatever it is that you're trading. When I go to the race today, right? When I enter the market today, after a while, you start to realize, okay, here's this bike that I get to ride today. Well, here are the little quirky things about this bike. You know, you press on the pedal, it doesn't really go. You know, you see a corner, you can only go 90 miles an hour, you can't go 80, you can't go 100. And I relate that to tickers, right? Is this a small cap? Is this a large cap? Is this some, you know, biopharma stuff? You know, is it something that's completely, you know, is this a brand new ticker that just IPO'd? Is this a brand new bike that they introduced to the racetrack? And then ultimately understanding that the goal of this race is not to win. It's not to win today. The goal of the race is to not hurt yourself to where you can come back and race tomorrow. That's the goal, right? And that's the goal for me in the market. I'm not here trying to solve it every day. I'm here as a risk manager, as a trader. And as traders, that's all we are. We're risk managers, and we just use trading as the vehicle, right? You know, you manage risk. That is always number one, because if you allow that one ticker to hurt you so much that you can't come back to the market tomorrow, you're done, right? And that race in the market's been going on since 1790s, right? Since the markets were established. And it's going to keep on going year after year, you know, decade after decade. So you can't win it. It's not a first, second, third type of price. The idea is I need to come to the markets daily and then come off, you know, as a winner, or come off as enough to where I can ensure that I come back to the markets tomorrow. You know, in a way, that's really how I view it, right, at a fundamental level.
That metaphor, that analogy is, I think, really interesting, really helpful, really powerful to think about. And when you're looking for sentiment and sentiment shift in a stock or in the market, how do you identify that, and how do you use it to your advantage?
Yeah, so there's many ways, right? You know, you have your fundamental aspect of stock analysis, right? You go down into the nitty gritty, and you start reading the 10Ks and the Qs, and, you know, do they have warrants? Do they have this and that? And then you have the technical analysis, right, of the market. Now, I don't think one is more valuable than the other. I believe both fundamental and technical are extremely valuable and very, very powerful on their own. However, if you want to get to that elite status, if you want to get to that next level, you have to marry them together. You have to keep both in mind, right? You cannot, in my opinion, you cannot solely be a technical trader, and you cannot solely be a fundamental trader, because I assure you, at some point, whether you consider yourself as one or the other, you actually do both, right? You look at, if you're a fundamental trader, you're going to look at a chart and you're like, well, you know, technically it doesn't make sense. Well, yeah, because, you know, maybe it hits your check boxes on a fundamental level, but on a technical level, it says something different, and vice versa. I mean, I can appreciate a nice straight trend line, and a you know, head and shoulders and torsos and calves as the next person down the line. I do it every day. I draw my lines. But to me, the most important aspect is psychology in the market, and both the market psychology and my own psychology, and how is that affecting the market. Because every time you press a button, you're affecting the market. It doesn't matter how big or small you are. You press that button, you're in the game. You're affecting the market. You're moving it. You're providing liquidity. You're taking liquidity. You're doing something to that stock. And I think understanding your place in the market is extremely important. And for me, I'm a trader, right? I take opportunity of price movements. I'm not here to predict what's going to happen in 10 years. I don't know, nor do I care. I don't care what's going to happen next month. All I care about is when I start my race today, I'm healthy enough and not hurt enough so I can come back tomorrow, and then the next day, and then the day after that. And eventually you start to become familiar with all of the little intricacies, right? Like, I can look at a chart today within 5 seconds and I'll tell you this is good or bad or not. And is it for me, right? It has a different feel. Just like I can hold on to a motorcycle and ride, and I'm like, you know what, this chain feels a little tight today. You know, this brake is not really catching. Well, yeah, same thing. You know, you're in a stock and you're like, you know what, this is not doing what I expect it to be doing, right? There's something off here. And if you don't take note of these little signs, then do understand that you're making a conscious choice about proceeding further. And you know, there's nothing that, and you have to be okay with that. You know, there's times where you need to push, and then there's times where you need to just relax, right? There is no winning. There is no solving this puzzle. You know, I think everyone looking for the holy grail. You know, what's the best way? What's the quickest way that I can take this $1,000 and turn it into 50? Well, it doesn't exist, right? There is no holy grail. I truly believe the only holy grail in trading is you. That's it. Because that is the only variable that you genuinely have control over. You can't dictate the outcome of the market, right? The market has sole authority of direction, and you have the options. I either join, or I fight, or I sit back. And you know, I think that's really what it comes down to.
Do you find that you trade the same tickers day in and day out, or the same sort of market cap sizes, or do you tend to mix it up on any given day?
Yeah, I mean, I don't really have a preference when it comes to trading a certain ticker or a certain name or a certain sector. You know, I'm not, you know, oh, I love tech, or I love, you know, pharmaceuticals, or small caps or large caps. No, I don't really care, right? Because again, I'm a sentiment trader, and sentiment resides everywhere, in small caps and large caps, and in big stock tickers and low price tickers, and it resides everywhere. So it just depends what the market offers today. It pretty much depends what type of motorcycle I'm given when I arrive at the track. You know, am I given a small capper today? Okay, then that's what we trade. Am I, you know, is there an opportunity in large caps? Okay, that's what I trade. Now, saying that, right, we have to understand that it's I don't use the same methodology across different tickers or across different market caps, right? You have to know that a stock like Nvidia is going to trade very differently than something that's, you know, micro float or nano float, or something that's, right, you know, 2 million share float, or whatever the case may be. I mean, it's going to trade very different. And your interaction with Nvidia is not going to be as meaningful as your interaction with, say, you know, a million floats ticker. You're going to have a different impact. And you have to know that. You have to know your place. You know, you have to know, what is it that I'm trading. So if I look at you know, something like AMC, let's say, or BBBY, right? You have to understand not just the fundamental aspect of the tickers, but you also have to include everything that goes with them. You know, their cult followings, and you know, their constant bickering between, yes, we're going to the moon, and oh no, this thing sucks, and this and that, and And you have to include all of those. You can't just say, oh, well, this is a 100 million market cap stock. It trades, 2 million shares a day, and this is how I'm going to trade it. Well, if you solely abide by these rules, if you every day try to fit something in that box, it's probably going to work most of the time, but there will be that one time that it doesn't work. And when something like that happens, when something ends up not working, it's not about the end result. It's about, how do I behave around it? And if you don't allow yourself to be open to manage different aspects of the trade differently and based on how they impact, what the company does, or what is the following behind the company, if you don't include all of that, then you leave yourself vulnerable to an outlier risk, something that you have no idea what's going to happen. And most importantly, forget about what's going to happen. Most importantly, how are you going to behave around it? Right? And when something goes from 2 to 5 to 10, you're like, that's it. I lucked out. But then it goes from 10 to 20 to 30. Well, how are you going to handle that? Right? If you constantly try to fit things in their own little check boxes without having that openness to, say, hey, I just need to be careful with this because it is outside of my realm of what I know, you're going to get hurt at some point. But for me, when it comes to trading, do I have a preference? Yeah, of course I have a preference. I think everybody has a preference, right? But if today the only thing moving are large caps, I'm not just going to shut off my computer and call it a day. No, I'm just going to look at my tool belt and say, oh, okay, this is what we're trading today. Got it. So this is who I need to be today, right? This is how I need to act today. If this is what this race is requiring out of me, that's what I need to do. I always have the option to sit this one out or give it a go. And that's how we progress, right? You have to learn to stay within your lane, but if you want to grow, you have to step outside of that lane. But you have to do it properly. You have to do it in a safe manner. You can't just start pushing buttons of something that you don't really know what to expect.
If you had to think about one particular trade or one particular type of trade that you've had that really exemplifies your trading style, what would that look like?
There was a trade I did on BBBY. I mean, if I look at the chart, you see it. We're waiting for the action. I see the momentum building. I feel the emotion coming on. And that sets off alarms for me, right? It's like, okay, hey, we're getting ready here, right? The tape is getting a little jumpy. We're breaking through key levels. I need to start watching this. And then once we see that sentiment shift, because by then I have already missed the long side, or at least, in my mind, I think I missed it. And then, I mean, I'm sure sometimes you're like, well, I'm not, this already went from 2 to 3. I don't want to chase it here. And then you look back in 2 hours and it's at 7. Mm-hmm. You're like, well, I probably should have gotten in, right? But the thing is, I'm not going to force an entry because I missed an opportunity, right? That's just ridiculous. I mean, you're just asking for it at that time. So for me, I wait for the exhaustion. I wait for that sentiment to shift, right? And I live in the tape on daily basis, right? That's truly where I live. I mean, of course, I look at my charts and I look at my levels, but I live in the tape. And it doesn't mean that I sit here and I watch, line by line every order. No, there's a certain behavior that the tape exhibits when there is a possibility of a sentiment shift. It doesn't mean it happens every time, but there's a certain aspect, there's a certain way that the tape starts behaving when there is a possibility of a change. And the reason why that happens is because it's driven by human emotion. And that human emotion, it looks the same. It looks the same yesterday, it looked the same 10 years ago, and it looked the same 100 years ago. And it's going to look the same in 100 years. I'm sure of it, right? Well, unless something happens with this AI stuff. But you start to pick up on it after a while. And there isn't a holy grail into reading tape. I don't, at least I haven't found it. It takes time, right? It takes time. But that's essentially what I look for. Once a move starts to set up, then it's like, okay, let me take a look at the tape. Let me look at the tape around these key levels, right? If I see on the chart, if let's say I look at yesterday and at $4 there was some heavy volume that came in, right? And it got sold off. If we're at 350, 360, 370, approaching that $4 mark, then I'm going to start looking at the tape. How are we behaving? Hey, is this seller coming in again? Are the buyers stepping in, right? Is there someone baiting the offer, right? To where what that means is you have someone sitting on the offer, some big size, so then the sellers start or the longs, they start panicking, hitting the bid, but then that bid doesn't drop, right? So that big offer that sits there, its only purpose is to fill the bid. And then once all the longs are out, once everyone sells, well, there's no one else left to sell, right? So then you yank that offer, and guess what? It just shoots right through. There's nobody there. It was never real to begin with. So this is that's essentially what I look for in various parts of the trade. And then once it shifts, then I can start in. I don't mind starting into a trade. And what does that mean for me? A starter size for me is it essentially puts it on my screen and says, hey, I want to start in here because there's probably a move coming up and I don't want to miss it. But the size relative to me is something to where I know once I scale, my average is within striking distance of the current price action, right? So if I start in something, say 1,000, 2,000 shares, and it's at $5, and then it goes to 7, I know that if I scale in, my average is going to be about 680, 687, 690. So then I don't care that I was bent $2 a share on the starter. That doesn't matter, because that to me is a placeholder, right? That to me says, hey, there's an opportunity possibly coming here around these levels of interest, right? It's a level of interest. When you see resistance or when you see support, it's never resistance and it's never support until after the fact. Just like all sorts of fundamental and technical analysis, I think all of that stuff is hindsight. You see it on the chart and it's like, oh yeah, I'm going to draw this line and I expect it to bounce, and then it bounces and you're like, see, I told you. Well, no, that's not really what happened. It's just it is now because it's after the fact, but you don't know that. For this one that worked, I can show you 50 other ones that didn't. So you can't really sit here and tell me that, this is it. I draw my support and if it breaks, it breaks and that's it, right? It's always, to me, that type of analysis is hindsight. So for me, levels of resistance and levels of support, they're nothing more than a level of interest. They're nothing more than, hey, you start looking at the tape here because here's what happened last time. And Price has memory, right? You see it in chat all the time. Oh my God, I can't believe this just came in within the same penny as the low yesterday. Well, you did because price has memory, and price has memory because people have memory. There's no magical equation behind it. There's no, how did you know? I didn't. This is a opportunity. It's a level of interest. It has a probability of succeeding. Now, what's that probability? Well, that's where you come in. That's where you have to do the back testing, and that's where you have to take that, strategy or whatever and make it your own, right? That's where you have to put in the work and say, and then have some sort of data-driven, uh, you know, factual backing behind what you're trying to say. And whether you realize it or not, it's all based on back testing. Some people will say, well, I've never back tested anything and I'm a great trader. Well, you didn't actually back test it, but guess what? Over the time, over the years, that's what you've been doing. You've essentially been saying, hey, every time X happens, I expect Y to happen. And then you look at that correlation and say, based on this market that we're in, based on this, market cap or stock or whatever, usually this setup has a 95% success rate, or 95, percent that it fails, or 80%, whatever the case is. And then that's where you, as a risk manager, come in and say, what is it that I want to risk, right? How much and of what do I want to risk? And to me, risk is not a, I don't necessarily base risk off a level. It ends up being a level, absolutely, because that's just how we translate things to a chart. But for me, risk means, when is my thesis wrong, right? Where in this trade, where I originally thought X will happen, and if it doesn't happen at that time, then that's my risk level. Because the moment that breaks, I'm no longer trading what I originally intended to trade. And it's okay to be in there, but you have to adjust in some fashion. You either have to take some size off, you either have to ensure that your starter is truly a starter, and then if it goes beyond that level, for me, if I then scale in, is my position average going to be within striking distance? And if the answer is yes, then I'm comfortable. But if the answer is no, then I'm uncomfortable. And if I'm uncomfortable, I need to fix it. And if I don't, then that's a conscious choice that I'm making. And I will get the consequences, and I have to be okay with that.
Stan, as part of your trading style, do you exclusively trade stocks and equities, or do you trade anything else like crypto or contracts, options, anything like that?
I don't necessarily dabble in options much. I do trade crypto. I've traded crypto for, let's say, since 2017. So for the last 5-6 years, 2018, right around the ICO craze. And then also NFTs. I trade NFTs as well. Recently, I have I'm on a few NFT projects. And again, for me, the reason why I'm in those fields again, because it's the same thing, Anthony. It's the same thing as equities. Why? Because it's all driven by humans. It's all, yeah, there's algos in there or whatever, but it's all design developed. It's all human behavior. And that to me is the gold mine, right? It's understanding human behavior, finding the patterns, finding what makes people tick, and just pretty much understanding how they're going to go through the emotions, right? And when they start buying things, and how it follows in the different cycles, and that for me is I understand that very well. So I don't care if it's crypto or NFTs, because that to me is just, again, a different motorcycle. It's just a different bike. It's the same, it's the same racetrack, right? It's the same thing, except me having a Honda today, I'm, on the Suzuki with same two wheels, chain, whatever. It's a little different, right? There's some intricacies, that you got to learn about crypto and NFTs. And also the other thing about especially the NFT world it's a very community driven type of world, right? It's first of all, it's extremely small, very niche, not a lot of people understand about it. I mean, maybe a lot of people watching this channel interview will, but when you zoom out, in the grand scheme of things, right, people still think they're just, JPEGs at their core. They don't understand the underlying driver, etc. Now, I do believe that they're, here to stay, or at least maybe not in the form we know them today, but just like crypto, I think crypto is here to stay. I think it's too far gone into the infrastructure for it to be just yanked out of, overnight. I think a lot of things will break if that happens. So in a way, I see this as an opportunity. I mean, I wish I knew anything about equities back in 97 or 98 when Google IPO'd. I wish I knew, and bought it at 26 cents or, $2, whatever the IPO price was, or, get Apple at, under $1. I mean, I wish I had the know, right? So that's kind of how I view crypto. Maybe we're just early, right? Maybe in 20 years, someone's going to say, man, I wish I was in there in 2017, when this one IPO or, came, this coin offering came, or when Bitcoin, I wish I was in there when it was $500, and then 4 years later, it's at 67,000, right? So that's, for me, again, it's a vehicle that I understand because it is simply based off emotions. It's based off patterns. It's based off behavior. So I can expect how someone might react to something. And it's, it's just an opportunity, I buy it and hold it. There's various projects that I'm on right now. And it's just, again, the whole point is I'm not doing anything different than what I do with equities. It's done with a different vehicle. Instead of a stock, it's crypto. It's some shitcoin or some good NFT project, whatever, right?
How can a trader be able to disconnect the emotions that they might be feeling in a trade, particularly one that might be going against them, with the actual behavior of stopping out of a trade?
Some of the emotions never go away. They never do, right? And some of the mistakes I make never go away. But what does happen with time is you learn to recognize them quicker, and you learn to acknowledge them, and you learn to choose a different option. Do I get FOMO? Absolutely, I get FOMO. I mean, I'm a human being. I have emotions. It's what makes me a human being. It's my emotions. But today, when I have FOMO, I recognize it because it invokes a certain behavior in me to where I know statistically it leads to a bad day. When I get FOMO now, I'm presented with the choice. Do I give into this FOMO and take my chances of having a bad day? Or do I ignore it? And with time, I just have gotten better at it, right? I've gotten better to where I can say, you know what I'm truly experiencing right now is FOMO. It's not that, it's not I'm missing a home run or I'm missing, the best trade out there. No, what's happening to me right now is, for one reason or another, I was not in that trade at the right time. So if I get in now, what I'm essentially saying is, I don't care what my risk is. I just want to be part of the reward. And statistically, that never has a good ending. You know, at least in my experience. So when it comes to managing these emotions, right? You know, if I get in a starter and then something happens and it runs against me, and you know, hey, what do I do? You know, do I cut this here, or do I add to this, or you know, is there another way for me to handle the situation? Well, with time, I have learned to either not get myself in these situations to begin with. That's the best way to avoid an issue, right? Just don't get into that position yourself. Or B, I have learned to simply recognize it faster. So if I'm adding to a loser, if I'm adding to a losing position, before, say 10 years ago, it would take me 4 hours before I realized that I've been adding to a loser and just hoping my average increases or decreases depending if I'm long or short, right? But now it takes me 10 seconds, right? So I give into the emotion at first because I'm a human being. I have no other way. But I have learned to recognize these emotions much, much quicker, to where they no longer have a detrimental impact on my trading outcome. And that is what it really boiled down to me, or for me, is what changes do I need to make to where I ensure I'm just not destroyed at the end of the day. But to go ahead and say that, you know, I have cut these emotions out, or to go ahead and say that I don't add to a loser or I don't experience FOMO, I think that's false. I think as a human being, you will experience these emotions. You will go through those emotions, and they're never going to go away. But you will get better with time in recognizing them early enough to where the impact and the consequence they have becomes more so a sting rather than a punch in the face. And all of a sudden you're missing 6 teeth. You know, now it's just a small cut.
Yeah.
Right. Much more manageable. Yeah. And you know, to be honest, Anthony, I think sometimes you have to lose some teeth. Right. You got to learn some way. You got to learn in some fashion. And unfortunately, there are some lessons that you have to experience in order to learn them, because the answer and the knowledge you get out of learning them by experiencing them yourself is very different from person to person, right? So maybe someone doesn't have to blow up 10 times before they finally learn the lesson and say, you know what, I'm just not going to add to a loser anymore. Maybe someone only blows up once. Maybe there are traders out there, super successful traders, that have never blown up, and I've just never heard about them, right? You know, maybe they exist. I don't know. But we all learn differently. And for me, it's recognizing what makes me tick, and it's recognizing what keeps me safe in a trade. That again, going back to the motorcycle racing analogy, my goal is to make sure that I can come back and race tomorrow again, and next week, and next year, and next decade. That's my goal. I'm not here trying to win the trophy, right? Because that trophy is fake in my eyes. It doesn't exist. There is no first place in the markets. You know.
Can you talk a little bit about expectations for traders? You know, expectations for what success in trading looks like, or expectations for what they can consider a good trade. You know, what's the role of expectations for traders, and how can they think about them in a healthy way?
I'm going to start this one with you know, one of those stats that you've heard. I'm sure you've heard. I've heard it a million times during my trading career. where 10% of traders succeed and 90% fail, or whatever, 5% succeed, 95. I believe that's just total bullshit, by the way. I don't think it has anything to do with that type of metric, because I refuse to believe that I will walk into an arena full of 100,000 people. I'm going to grab the mic and say, 95,000 of you will never turn a profit in trading. That in itself, that type of statistic is an outlier, right? It's a statistical outlier. What I truly think is only 10% of traders put in the work required to become consistently profitable. And even less than that, even less than those 10% of traders actually make the changes required within themselves to take them to that next level, to that elite level, to that level of consistency, profitability, and just day after day success. It's not a it's not something to where you can arbitrarily go to a gymnasium and say only 10% of you will succeed. No, do I believe that only 10% put in the work? Yeah, I can believe that statistic, right? But I do not believe that only 10% are capable. I think way more capable, but only 10% are willing to actually commit, and even less percentage are willing to actually change themselves to align better with the market. Because there are, as you go through trading, there are different filters that filter traders out. Your number one filter, let's say, could be, some people just cannot stop adding to losers. Well, guess what? The people that cannot learn that lesson, once they hit that, they're going to get filtered out. And then you go to your next filter and your next filter. And each filter requires you to change something about you. It has nothing to do with the market. It has nothing to do with the stock or with this tweet or with this, earnings report. None of that. But at some point, you're going to come up against something that's going to require you to change. And the moment you don't change, that's your filter. That's where your journey stops. And it could be fine, right? Some people are okay making consistently $80 a day and for the rest of their life. That's fine. If you want to live within those means, absolutely. There's nothing wrong with that, right? There's nothing wrong with making $200 a day for the rest of your life. If that's what's required for you to be happy, sure, do that. In my eyes, you're a successful trader. In my eyes, you're in that 10 percentile, right? But if you want to go to that next level and you hit that filter that requires you to change something and you refuse, then you're going to be filtered out of the game. I think that's where traders get in trouble. They come up against something that they're unwilling to change about themselves that will allow them to break through the next market, to the next barrier. And that's it. Now, don't get me wrong. There are some people that are naturally better at things, right? Like for me, I'm just, naturally, I believe I'm naturally better at being honest with my emotions than most people. And that allows me to go to the next level. I think, you take someone like Nate. I don't think there's going to be another Nate, right? He's just naturally good at what he does. But it doesn't mean that you or somebody else can't learn to be profitable on a consistent basis. I mean, am I ever gonna get to that level? I don't know. Is it my goal? No, it's not. So I'm not gonna find out, but I'm not gonna find out because that's not my goal, right? My goal is to find what makes me tick and then improve on that consistently, little by little. I mean, little by little. If there's one thing I have, Anthony, that is patience. I mean, I'm extremely patient, and that has come in every aspect of my life, not just trading. I'm not just patient in trading, right? I'm patient in life general. Uh, you know, I'm patient in my previous job that I did, as a IT executive. It's what was required of me in order for me to continue to grow. And it's a skill that I have and I can use to my advantage, because patience in the market is very important. Where some people get in trouble is confusing patience with conviction, right? You often hear, "Oh, I lost patience, so I'm covering this here," or "I lost patience, so I'm selling my position here." You didn't lose patience. You had no conviction. Let's be real, right? I mean, let's call a spade. You did not lose patience. You just didn't have conviction. You shouldn't have been in this trade to begin with. So it's understanding that aspect is truly and setting that expectation for yourself. And what can I expect out of me? What can I expect in that aspect? So to reel it back in, I don't believe in the whole 10% succeed, 90% fail because it's trading. No, 10% succeed because 10% are willing to put in the work that's required in trading. I mean, I can't imagine brain surgeons, someone doing brain surgery or some sort of a, highly advanced medical degree. I can't imagine it's 50-50, are 50% of people able to do that? No, they're not. But it has nothing to do with the work itself. It all has to do with, am I willing to put in the hours?
Thank you. That's an interesting perspective. And I think it's important to acknowledge something that you said, which is that traders have to identify what might filter them out and either change or recognize that they could get filtered out. And so along those lines, one of the questions that I had, Stan, is how can traders put themselves in a position to make the changes necessary so that they continue trading for years down the road?
In my mind, you have to have some sort of a vision that is your guide. Where do you see yourself in a year? Then let's go higher. Where do you see yourself in 5 years, in 10 years, in 20, 30? You don't have to figure it out how. Don't worry about the how you're going to get there. That's just mechanics. But if you don't have that long-term goal, if you don't have that vision that drives you, that motivates you, you're essentially like a lost ship at sea, right? Because in order for a ship to get to its destination, you gotta have your origins, right? You need to know where you are today. And then you get to your destination, right? So if you don't set that long-term vision, if you don't set that goal, you're just going to be swimming in circles, and you're going to keep trying different things, and this doesn't work and that doesn't work, and you've only tried it for a week and it's not happening, and why isn't it working? This sucks and it must be me, right? And oftentimes that is the right answer. Oftentimes it is you that needs to make that change. But having the goal, right? Having some sort of a goal, and just being real about it. Don't expect to be an overnight success. I don't understand why people take trading so lightly. I mean, trading by far, Anthony, is the most difficult thing I have ever done in my life. And I have done some crazy shit. I mean, I have done, complex things and difficult things and solve big problems and small problems. But this trading thing has been by far the most difficult. And I think what makes it difficult is because at the end of the day, you cannot shift the blame to anybody else but you. It's just you out there, right? Because at the end of the day, the only one responsible for the outcome of your results is you. I mean, if you work in a job somewhere, maybe you can slide the blame to somebody. Oh, it was this team that did it, or oh man, this team sucked for the finance did this, or the HR department said that, or my boss or my colleague. That doesn't happen in trading. And I mean, I know, you hear it all the time. I see it, we all see it. Oh, the market did this and this stock, it's garbage, they're after me. And it's like, no, they're not after you. The market didn't do anything, right? It's you. You solely hold that responsibility. And I think that's just a hard thing for some people to hear and realize and see. And I think that in itself is one of those trading filters, right? Because they come up against that filter and they're like, there's no way it's me. It's the market for sure. I'm sure of it. Okay, well, let's see how all that goes for you. I mean, I've seen it. I think that's one of the advantages or benefits or whatever you want to call it for me being in this environment for so long is I have seen people go from absolutely nothing to having everything and then back to nothing. I mean, like that. Why? Because they refused to admit that they were wrong at some point. They simply refused to even consider the remote possibility that what they're doing is maybe the wrong thing. They were so convinced that this is a garbage company, that it should have failed and it should be at 50 cents, not at $6. They were so convinced that they did the one thing you should never do, which is hurt yourself so much to where you can't come back to the desk tomorrow. And hurting yourself so much, I don't necessarily mean financially. Even worse is if you hurt yourself here. You hurt that mental capital. Mental capital is far, far more precious than financial capital when it comes to trading, because it takes much, much longer to recuperate. It's a blow to your confidence, not only at a trading level, but you walk outside the office and you feel like a shitty human being, right? You can't do it doesn't seem like you can do anything right. So I think having those realistic expectations of you have to treat this like a business. I mean, this is no different than the Olympics or than some sort of high level athlete, right? You don't you think Michael Phelps woke up one day and started swimming the fastest butterfly out there? No, he didn't. He's been out in the swimming pools daily because that's what it takes, and that's how this is, right? And then you see, I mean, the barrier to entry in trading is so insignificant. There's almost no barrier to entry, right? You scram up some cash and you're ready. Day one, trade one, you're in there versus literally Warren Buffett versus Charlie Munger, right? Versus Bill Ackman versus, I mean, you're literally day one, you're in there versus these people. Because there's no barrier to entry. All you need is some cash and you're ready to push buttons. Now, do you realistically think, I mean, let's think about it. Do you honestly feel that you would, as a brand new trader, you would know better? No, there's no way. And whether you know better or not, it has nothing to do with it either, because I assure you, emotionally, you will not have the experience to handle that. You don't know what being, full size in a position and then you're upside down, 10 a share, 50 a share, whatever that means to your account feels like. There's no way to know unless you're in that position, unless you go through that emotion, unless you're in that experience. There's no way to know, right? There's no way someone would know what sitting in this chair feels like unless you actually sit in this chair. And I can describe it to you. I can tell you about it. I can send you pictures. I can send you videos and annotations. There's no way you know until you actually come and sit here. And I think that's some of the, some of the barriers that, traders or expectations that traders completely disregard from the very beginning. They don't think about that. I mean, I've been here day after day, week after week, month, for over a decade, right? Every day the market closes, I'm reviewing my trades. I'm jotting things down and whatever. I mean, not to the same extent that I used to do, right? Because now it's second nature. Now I can look at a trade. I can look at a red day, and I'll tell you exactly what happened, right? And it's usually one of two reasons. I either A, broke a rule, or B, the market changed. That's it. There's no other reason for me to have a red day. It's simply as simple as that. Two reasons. So I don't have to spend 15 hours figure out, oh, why does this trade didn't work? Well, here's why it didn't work, because I didn't stop out when I was supposed to stop out, or I had a little extra size than I originally intended. That's what it did. Or a PR came out of somewhere and it just, blew everything off. What am I going to do about that? Nothing. Take it on the chin and move on, right? Because I'm here for the next race. I'm here for, hey, give me that next bike so I can finish my track today. So then I can come back tomorrow, right? I'm not going to spend, 20 hours. So I think that's extremely important is setting those right expectations. So don't think because one thing, you made a bunch of money in 2020 and 2021, and now all of a sudden, there's this, I'm an expert. Maybe you are a prodigy. I'm not going to discount that. I live in the world of probability, which means it's all possible, right? It's all possible. But I mean, when you think about it, I get these PMs all the time, these private messages like, hey, I've been trading for 6 months and I just can't figure it out. And I'm like, I sit back there, I'm like, man, 6 months. I'm like, do you realize that some of the funds, it takes them 8 months to fill one position? Like, you haven't even been through a cycle of one fund filling a position. And you expect to make money? I mean, some funds, it takes 4 months just to sell 1 million shares, right? You can't sell 1 million shares tomorrow in something that's illiquid. You're going to move the market, right? So it takes time. But so then, you as a new trader, you're like, I've been at this for 6 to 12 months, man. It's not making sense. Well, I don't know what to tell you. It's not going to make sense. It should not make sense. It's genuinely not that easy. It is difficult. And you have to be okay with that. You have to be willing to put in the time. You have to be willing to set the expectation. And the way to measure your progress is something that, my mentor to this day, I chat with him, regularly, and I'm like, hey, you know what, man, this sucks. I'm struggling with this, and this is not happening. And he said, are you learning? Are you a better person today than you were yesterday? And I said, yeah, actually I am. I know what not to do. I know what. He's like, okay, just keep going. You're successful. This is what it takes. Are you a better person than you were yesterday? And you could be a better trader. You could have done something better yesterday. But it's that incremental progress, day after day, week after week, year after year, that eventually allows you to have everything come together. And some people, that happens to them quicker. Other people, it takes longer. Some people prefer it that it takes longer. For me, I knew I wasn't ready to start trading within my first year or 2 or 3. Why? Because I'm honest with myself. That's not how I operate. I'm not going to force it. Right? What has made me successful in my careers is a certain way of being. So I'm approaching a new business. I'm approaching a new, venture, why am I going to change what made me successful today? So setting those expectations is extremely important, and they have to be real. They have to be something that matches you as a person. Don't worry about the chap next door. That's him or her, right? Don't worry about that. They're going to move at a different level. They're going to move at a different pace. They have different priorities. They have different responsibilities. You know, like for me, for instance, if I cannot trade 20 tickers at the same time. I can't do it. I'm not going to sit here and pretend that I can. No, I tap out at about, 8 to 10 tickers. That's it. I'm done. Because I know, and I have the data to show it, that statistically, if I push above 10 tickers, my result gets sloppy. And I'm not okay with that. So I'm not going to do it. But the right expectations that align with who you are, I think is the recipe for success.
And how early in a trader's journey should they start to think about the importance of mindset?
I think day one, Anthony, I think day one, they should start thinking about mindset. Because for me, successful trader is not a destination. It's a way of being. It's a way of thinking. That's what a successful trader looks like. It's not a big P&L. It's not a 99% win rate. No, a successful trader is a state of mind. It's a state of being. It's a state of how do I incorporate my psychology into the market psychology, and more importantly, how does that correlate and impact each other, right? And always keeping in mind that you do not have authority over the market. I don't care who you are and what you do. You do not have authority over the market. Market always has sole authority over the direction of the trader. And the moment you decide to fight that is the moment that there are going to be some consequences. There could be good consequences because maybe you get a bailout, maybe you get lucky, maybe a PR comes out of left field and all of a sudden it's nice. But the only thing that did is taught you a bad habit. And you don't realize it today, but you're like, you know what, let me add to this position just one time. And then it ends up working. You're like, oh, that's not bad. No, let me do it again. And it ends up working. And then little by little, you start building these bad habits at a subconscious level to where they're going to show their ugly head at the most inappropriate time. And more often than not, that's going to be your last day trading. I've gone through it myself. I've blown up at least 3-4 accounts, right? I mean, relatively small, but it's not about that, right? It's about every time I blew an account, guess what happened? It took me 2 weeks to recuperate the financial aspect of it, but it took me 2 years to recuperate the mental aspect. And it affected every aspect in my life, not just the trading aspect, but I was a shitty husband. I was a crappy colleague, a crappy boss, whatever. It affected everything. So at some point, I had to say, no, I'm not going to put myself through the same pain. I'm not going to make that choice again. And that, it takes work. It takes work to be able to, have that in integrity, right? Is to have that mindset. So I think the sooner you start working on that, I think the sooner you start realizing that the only thing you can change in a trade is how you react to it, the sooner you're gonna come to some sort of a consistent path, right? Because for me, I can't remember the last time I've had a fat loss. Whatever fat loss means to you, right? For somebody it could be $200, for somebody else it could be $250,000. It doesn't matter, whatever that means to you. Like, I can't remember the last time that's happened. Why? because now I know what type of behavior, what type of mindset leads to a fat loss. So the moment I start to experience those feelings, that mind, I'm like, I'm done. You know, I size out, I size down, I go for a walk. I don't want to take the chance of finding out, hey, am I going to win a home run on the straight, or is it going to be a fat loss? The fact that the probability of a fat loss is higher than normal, that's enough for me to say no more, because I know what that leads to. It leads to a blown up account. And furthermore, it leads to a ruined relationship. It leads to some sort of a fight or whatever. It leads to lost mental capital, which for me, like I said before, it is far more precious than monetary capital. So my suggestion is, from day one, you have to work on mindset. And I have done a lot of work myself, personally, internally through various emotional intelligence, aspects and courses and classes, and I truly believe that from that point forward, my life had completely turned around. Right? I did that work back in, 2012, I think. Is when I really started to focus on mindset and way of being and understanding me as me as Stan, as Stan as the brother, as the son, as the husband, as etc. Right? Who am I, and then how that plays a role. But having that emotional stability, I think, is what provides a competitive advantage over the average market participant.
Absolutely. One of the things that I think traders, at least in popular discussions, might not really talk about so much is the importance of emotional intelligence and the importance of mindset. Trading isn't so much about the buttons that you press or how excited you are in a trade or what the P&L is. It tends to be, from the elite traders that I've talked to, this emotional side of trading and making sure that they're in an optimal state, physically in an optimal state, mentally and emotionally, to continue to trade day after day and decade after decade.
Yeah, and to add to that point, Anthony, I think there comes a point in your trading journey to where you can no longer extrapolate opportunity from the market. Like you've learned how to trade. You've learned when to stop out. You've learned when to add. You have learned when to do this and that and all the right things and check all the right boxes. You let's say you know all of that. How do you grow next? That's the only way. Right? That's the only way. That's the only way to grow beyond that point. Because at that level, at that point, the playing field is leveled, right? So your only way to grow is by focusing on you, is by, hey, how do I improve my performance? What makes me healthier? What makes me more energetic? What makes me more focused throughout the day, right? How can I get better sleep, right? Because these are things now where they improve you, not only body and mind, but they improve the way you are embedded in the market. Because pound for pound, you're going to be better than the next person that's in that same trade, in that same time, in that same position. Because maybe you have more stamina today, maybe you're more aware today, so you hold your position a little longer than the next elite trader, right? And that gives you that edge, and exponentially you start building on that. And I think as you increase, as you get to that next level in your trading journey, it takes so much more work to move the needle very, very little, right? In the beginning, as a new trader, man, you change a couple basic rules, boom, you go from $1,000 a day to $10,000 a day, right? you just make small changes. You just cut one bad habit, immediate change. But as you progress, as you get to the next level and next level, as you learn how to do things properly, when to stop out, and all the other things I mentioned before, then that, what it takes to move you to that next level, my gosh, man, that takes a lot. It takes a lot of effort for very small movement in terms of the needle. But keep in mind that level is very, very, very much above where everyone else is. To me, the filters, the filters between each trader level, they're like this thin layer of fabric, right? You can see it, you can almost feel it, right? You're like, man, if I can just, like, it's right there, how do I get to that next level, right? Well, that's what it takes, right? How do I break through that fabric? And there comes a point in trading where it's not in the chart, it's not in the market, it's in here in some fashion, that you get to go to the next level.
Well, thanks. I think that's extremely helpful and important for traders to listen to and to realize and start to make some changes if they need to.
Right. Yeah. Yeah. And the thing is, like I said, you have to have a realistic expectation. Don't expect to be like, hey, well, I just did what Stan said. How come I don't have these results? Well, let's go back to square one. What did I say in the beginning? You can't just take something that's not yours. You have to make it yours. You can take the idea, right? But maybe the whole motorcycle and race thing, maybe it doesn't make sense to you. It's what makes sense to me, right? But you can take that analogy, take that concept, and be like, hey, how can I break down trading to something that I understand? That's really the point of it. It's not that, now everybody should be racing around tracks. It's not the whole point here, but it's, what do I need to do? Who do I need to be? Right? Who do I need to be? Very important in order to persevere, in order to get to that next level, is what it comes down to.
One of the topics that I wanted to bring up, Stan, was Investors Underground, because you've been in IU for such a long time, and the members of IU will definitely understand the points that you're making today, because you provide them daily to some degree in the chat. And so I just wanted to ask about your background with IU. What was IU like when you first started, and how has it changed through the years?
When I started, Anthony, I think there were, I don't know, I can probably ask Nate and he'll pull up stats, but I think there were like 80 people total, in the room. And it was a very much, it felt very much like more so a forum for people with like-minded interests rather than what it is today. And it's been amazing just seeing the community expand, but also the Investors Underground essentially going from a, hey, here's what I do and I can help you, to a truly platform oriented tool, right? For me today, Investors Underground is a tool, right? It's I use it for all of the features that are in there. Tremendous features that I think are not available anywhere else, because some of them are homegrown. They're the features in IU tend to the traders in IU, right? There is that harmony. There isn't some outlier thing that nobody uses. Everything that's in there, people use. And if you don't, then you're not getting full value, and you should really look into it and start using the things that are available. The HOD scanners, the burst alerts, the scans. Everything, right? For me today, IU is a tool. I use it mainly to, just like social media, I use it to gauge sentiment, right? I use it more so for the news aspect, because it's one of the fastest places to get news. And the way, news are congregated and the way they're filtered out, it's from reputable sources or consistent sources, etc. Like, I don't have to worry about, hey, is this thing legit or not? No, I already know it is, right? I already know where it comes from. So for me today, the use I have of IU today is very different than it was, 10 years ago. But what IU, how IU has changed over the years, it has gone to more of, like I said, here's a place for like-minded people to share ideas, to now being a platform that you can actually come in with your own trading style and only get in or get out of it what you need, right? Because I think the majority of traders are momentum traders, or as we identify as momentum traders. But there's traders, right? There's some crypto traders. I trade some crypto myself. There's there's all sorts of different personalities and different ways of learning, of consuming the information, that it doesn't matter who you are, you will find value, in my opinion. If you're truly into trading. What IU is not going to do is, it's not going to give you a holy grail, nor is it ever going to say it's going to give you a holy grail, because it knows that's no such thing exists. However, it will provide and establish the environment that will allow you to grow as the trader that you need to be. And then you have, moderators, you have other traders in there. I'm sure there's plenty of other traders with, that have been there for 5, 6, 7, 10 years as well, that can offer a perspective and guides and guidelines. And essentially, the things I share in chat are nothing more than my scars, or nothing more than lessons I have paid thousands and tens of thousands of dollars to learn over the years. If I say something, hey, cautious with this, or caution, exert caution here, it's not because I just made it up. No, it's probably because I've had a fat loss somewhere down the line back in the day on it, right? And it's for you to either take it or ignore it. It's really up to you. But that's the beautiful thing about the community in general, is it is ever growing, ever building, right? It's always, I see it as community and platform in service to the trader. You're able to get mentorship, you're able to get videos or whatever else, like I said, that's the content that's available on there. But most importantly, it has a proven framework for success. That doesn't mean you're not going to have to put in the hours. Remember what I said before about the whole 10%, 90%. Be careful where you are in those two. You have to put in the work. But if you're willing to do that, I believe you will find some sort of common grounds and common understanding with other traders that will help you grow. And I have noticed that change over the years. You got to remember back, like I said, like chat rooms was a very, very new thing. When I started with IU. Beside it looking very different, even today, the IU looks very different than what you would normally, see a chat room, because now everything is either on some sort of a Discord or Telegram or whatever the case is. But I actually admire that about IU, that regardless of all of the pressure over the years, and people are like, hey, well, why don't we move this to a Discord? No, it's not. Why? Because it genuinely has a different function. If you want to learn and I'm not kidding when I say this, if you want to learn a generational wealth style of trading, I think this is one of the few places to do so. At least it's been my experience, and I think it's something that it provides everything needed for the person that wants to make it. But you got to put in the hours. You got to put in the hours. It's not it's not a served on a silver platter. And the thing is, I can tell you, I mean, and I've done that in the past, like you can tell someone exactly when you're going to get in, exactly when you're going to get out, exactly with how many shares and whatnot. And man, they're still going to mess it up. They're still going to mess it up. I mean, I guarantee 100%, because that's not how trading works, right? Because trading, again, is let me rephrase this. Good trading is a state of mind that has to align with who you are as a person. So you cannot blindly follow someone. You will never know their situation, priorities. I mean, there are times where I have a plan, right? I'm in a trade, and I'm like, hey, I'm gonna short here $20, and then I'm gonna cover at 17, and all of a sudden I cover at 18. Why? Because I saw something in the tape, because I saw a PR come in, I saw something else come in, but it changes. It's dynamic. The market itself is dynamic. It's very it's difficult to say I'm only going to do A, B, and C, and I'm never going to do D unless F comes in. Well, you've already set so many conditions. It's almost impossible to win in that strategy, right? You have to be dynamic. And I think that's something that IU offers and has offered over the years, and it's, to me, it's been an absolute pleasure and honor to have been a part of it and just watch it grow and develop. I mean, it's like at the end of the day, it's a business, right? It's something that must be treated like a business, just like you must treat your trading like a business. You can't oversleep every day. You can't just take off when you want to. No, you got to set those things, right? You want to plan a vacation? Yeah, I mean, you work for yourself. You can trade from anywhere you want. You can do whatever you want, but guess what? You have to get there first before you can do all those things. You can't just say, well, I'm a trader, and you know what? Let me just take my laptop on the beach, and yeah, I'm going to do that. Can you? Yes, you can, but you have to get to that point. And to get to that point, you have to treat it like a business. You have to be diligent, be cognizant, be disciplined, be relentless, and make it yours, right? And I think a lot of people also fail at that because, one, they've never ran a business. Two, they've never worked for a business or something. They just come out of high school and whatever, or college, and they're like, yeah, let me just get in this stuff, right? Push some buttons, and I mean, this guy with the Lambo picture and whatever on Twitter just did it. Why can't I? Well, you're not. You just don't have that experience. I mean, I spent. To this day, like I said, just consulting for other various tech companies. 16 years or 15 years of my corporate life has been in high performing companies. I have built the discipline, right? I already knew how to read a balance sheet. I already knew what to look for in an AQ or a 10K or whatever. Like, I already know about all of these, money flow and cash flow. I've established that discipline through sheer work experience, and now I'm taking it to my trading. So you cannot expect brand new, fresh out of high school, college, whatever, with absolutely no experience. You're like, let me just break through this field. Oh, and by the way, trade one, day one, I'm in with Warren Buffett. Forget it. You're toast.
What advice would you give to newer traders who are just jumping into the IU chat rooms for the first time?
Don't be discouraged by how fast things move. It is remember, it's a different dynamic, right? I don't know. I think when was it? Maybe just beginning of or whatever last year or within the last several months is when I started engaging in chat, right? I'm sure most people thought I was a brand new member. They're like, who's this guy? I've never heard of this name, right? But man, I it took me years, not many years, but it took me 2-3 years before I got comfortable enough to where I can say long XYZ at this price and post it in the main room, right? Because I didn't think I was good enough. I didn't think I had anything of value to say. I didn't think anything of that. But also because I simply didn't understand the language. I didn't know what some of the stuff meant. I mean, it's like there's different acronyms, different expectation. Some words, some sentences mean completely different things, right? And eventually you kind of learn who people are and how they trade and what you can expect. So if you're a new trader in IU, that's what I would say is just give it some time. Give the opportunity for you to understand the concepts or the wording or the terminology that is being used. And don't be afraid to ask questions. One thing I will say though is don't waste time asking questions that you can easily Google, right? I mean, I get a lot of PMs throughout the day, and sometimes I have to be like, yo, I'm gonna put you on a 5-question max a month type of thing. Why? Because the stuff you're asking me is you can A, easily Google, B, someone else can answer. And that doesn't come from a place of, I'm too good for you, I can't help you. No, it's genuinely, if you're a brand new trader, there's no way you can learn from Nate directly. It's not going to happen, right? And there's no way you can learn from someone that's been trading for 20 years directly. Everyone looks at these big traders around and they're like, yeah, I want this person as my mentor. And they've been trading for 6 months. Well, here's the thing. It's almost impossible for you to have such a big discrepancy and such a big gap between the mentor and the mentee. Why? Because say me, if I'm to mentor someone and throughout the years, I've taken people under my wing and, to this day, but if I'm going to do that, me as a seasoned trader, I genuinely forget to teach some fundamental basic trading 101 stuff because my expectation is you should already know this, right? Like I don't even think about to try and instill in your behavior to say don't act to a loser. Like I don't even think about to even teach that. So it's the same thing as a new trader. Don't try to reach for the very top. They cannot help you. And it's not that they can't help you in reality, it's just they genuinely don't think that way. They just do not think in a way to, they assume that you have this fundamental aspect. So it's always, when you look for a mentor, look for someone at your level, look for someone a little bit above. I mean, you can look for someone under, but there's really no value there for you, maybe for them. But, and it doesn't mean that they're, way more profitable. It means maybe they have something, they're struggling with a similar thing that you are right now, and they can help you how they overcame it, right? So I think that's essentially for newer traders is don't get discouraged and I would say look to find the appropriate mentor. The best is not always the best for you. You have to know that. You got to know what works for you as you as a person first, second as a trader. You got to follow that order. You have to understand, just like for me, I must understand who I am first as Stan, and then as Godfather or the trader, right? That's the order.
Stan, can you talk about the difference between confidence and conviction and how it's important for traders to combine them in order to succeed in the markets?
But yeah, absolutely, Anthony. I think um, so. Let's first start with confidence, right? What is confidence? Confidence essentially is the is the belief that you have that you can consistently do something with an expected outcome, right? Whether it is I'm confident in playing soccer well, or because of XYZ, right? So confidence is something that comes from within, which is based on consistently hitting an expected outcome, right? That's confidence. Conviction is when you take that confidence and you apply it to the edge that you take in the market. That's conviction, right? You take the confidence and you apply it to the market opportunity and you get your conviction. And then that allows you to outperform the average market participant. And it's once you combine those two, is that you get that beautiful execution of shorting when you're supposed to, or covering, or buying when you're supposed to, and selling, because it all has to do with you executing consistently with an expected outcome applied to an opportunity given to you by the market, i.e. edge that you've developed.
And how long might it take for a trader to become confident and find that confidence?
Yeah, I mean, that varies. That varies based on the trader, right? It varies based on the person. I think confidence is something that's built over time, and I also think that confidence can be ruined very, very quickly, much quicker than it can be built. And I speak from experience, right? In a way of, there are days where I cannot make a winning trade to save my life. And I've been doing this shit for over 15 years and I can't execute a single trade to save my life, right? Now, what do I learn from that? Is it something that I'm doing wrong? Or is it something that I'm not? Is it the market that's coming in? But it's very important at the end of the day for me to realize, what is it that I have control over and what is it that I don't? Because that's how I build confidence. And oftentimes, traders will ruin their confidence because of something that was outside of their control. And they think, oh, I'm a bad trader, or I have a red day, or I have a red year, or I have a red month, so that must mean I suck, et cetera, et cetera. And it could be true. This is where integrity steps in, right? And I'm going to touch on that in a second. But essentially, confidence is something that is developed from within by consistently executing with an expected outcome. So, it has to be, again, data driven. It has to be proven in some way. It has to be yours. Confidence is yours. Conviction is when you apply that to the edge in the market and you're able to take advantage of the opportunity, which in turn builds more confidence. And then you're able to turn that and apply it to more conviction. And it's that nice cycle, right? Which, again, cycles work very well to improve, but also the other side is, if you get stuck in this hamster wheel, in the self-fulfilling prophecy of, man, every time I enter, it rips, or every time I enter, it drops. And you're just stuck with these negative thoughts. And the universe has a funny way in working because the more negative you are, the more, I can't do this, or this doesn't work, or this person sucks, or it's the market's fault. You're always going to attract these funky little scenarios. It's just how it works, right? I don't know. I don't know anything. It could be a great force at work, whatever the case is. But if you focus on the negative, you're going to bring in the negative. And it doesn't mean ignore the negative. You have to acknowledge it and see, hey, what can I do to fix it, improve it, right? But you have to, think in a different way. You cannot be consistently stuck in this hamster wheel of self-fulfilling prophecies and saying, every time I enter a trade, it's going to be a loser, because at the end of the day, it will end up a loser. And what you're going to say is, see, I told you, man, look, I can't do anything right. Well, not with that mindset, you can't. And nobody wants to help that person anyway. I don't want to be stuck around someone that's constantly complaining and doesn't see the light at the end of the tunnel, and then they come at me and say, "Oh, well, it's easy for you to say, you've made it, quote unquote." Well, how do you think we got here? I mean, Nate just said that not too long ago. I mean, what, you don't think I've hit rock bottom? You don't think I've had weeks and months and years in despair, and am I fit to do this? Am I testing and questioning my own sanity? Am I able to do this? You don't think that's happened? Of course it has. Of course it has, right? But for me, it's just, again, back to square number one, the type of person that I am. Failure is not an option. I don't believe in it, right? It's just not an option. So you just keep pushing forward. I tried this door. It doesn't work that way. Got it. I'm not going to use this door anymore. Oh, let me try this one right here. Open that one. Nope. Okay, got it. Let me try the next one. I'll find a door that I can go through eventually. I assure you. And I'd mentioned integrity. This is where integrity steps in, right? When I say, is it me or is it the market? It's very important to establish what where the issue is, because oftentimes traders are focused on the P&L. They're like, how can I get this result? How can I get this outcome of the trade, right? I want the green. I want to change the green. I want more green. I don't want as much red. How can I do that? Well, you can't, right? Because the P&L is a byproduct. It's nothing more than the right side of the equation. It's nothing more than the 6 precede or following the 2 times 3 equals 6. That's all it is, the P&L. And the 2 and the times 3 in that side of the equation, that's you and the market. And as we have established, you cannot have authority over the market. So you can't change that. So if you have an equation of 2 times 3 equals 6, and you want to get to 8, and the 3 is and the 2 is the market, the only thing you can change is you, which is the 3. You can put that to a 4, and then you have the 8. But you can't just grab the bigger P&L. That's just not how things work. At least I haven't found a way. And again, this is where integrity steps in, which means, what's integrity, right? Doing the right thing. Well, it's not just that. It's not just doing the right thing. Integrity is doing the right thing when no one is watching. That's integrity, right? Because in this game, no one is watching. There is no one over my shoulder, right? It's me. And if you don't have integrity, you're going to come against a filter that you're going to be unwilling to change. And that's going to be either A, the time you get filtered out of the game, or B, your ceiling. You will never exceed that level. For some people, it's okay. And if that makes you happy, that's beautiful. But if you want to grow and you're unwilling to change and you keep blaming somebody else or something else, you got to look inside.
And in order to maintain integrity, are there certain things that traders could do? For example, like create some rules or other things?
I mean, absolutely. It's again, it all comes down to setting expectations, being realistic about what you expect, being honest with yourself, and being honest and objective at the results that you're seeing, and not trying to blame somebody else or find an easy way out. There is no easy way out. You have to put in the work. You have to put in the hours and do that. So for me, like what I used to do and still do to this day is journaling. Right, I could journal some things. I could look at previous results or previous data, and what does that mean? What path does that lead me back towards, etc. And just being disciplined. Having the discipline to persevere, and having the discipline to come in every day and do as you say, because that's integrity. You do as you say. You say, I'm going to stop out here, and all of a sudden it's 2 points higher and you're still in the position. Well, you're living out of integrity. And guess what? If you lack that discipline in your trading, I can assure you, you lack that discipline in other areas of your life. Because your chart is just a mirror of who you are, whether you're in front of it or not. But if there's some sort of funky business going on, and you lack discipline and you live out of integrity in your chart, that probably happens in other areas of your life, which is where the whole point of, you have to understand who you are. You gotta get a hold of that mindset and really push forward with that.
Stan, if it's okay with you, I'd love to go through a lightning round set of questions. Quick questions, quick answers. Is that okay with you?
Yeah, let's do it.
The first question I have is, what's the best piece of trading advice that you've ever received?
Fail early and fail fast.
What do you consider to be your greatest strength as a trader?
My mind, my emotional intelligence.
Are there any areas of your trading that you would love to improve on?
Portfolio management, right? I would like to improve on and start, just like I have been, even over the last year or two or so. I have shifted focus more so from, smaller time frame to larger time frame.
If you could give one piece of trading advice to all new traders, what would it be?
I would say focus on mindset. I'm going to double down on that one.
Are there any areas of trading and becoming a successful trader that you think are often overlooked or undervalued, underappreciated?
Yeah. Well, I almost feel like that's the only thing I'm going to say. But I mean, for me, the biggest part is emotions. I think you must understand not only yourself, but how you emotionally impact the market that you're trading.
Do you tend to use hard stops or mental stops?
Mental stops.
Are there any particular indicators, technical indicators, that you favor when you're looking at your charts?
VWAP. That's the only thing I have on my charts. I don't use any SMAs or EMAs or anything like that. VWAP is the only thing I use, and the rest is all tape.
Is there anything that you do away from the trading desk that you found provides benefits for you when you're back at your desk trading?
Essentially, for me, when I leave the trading desk, I make it a point to be truly disconnected from the trading desk. I don't check my phone for charts. I don't check my my Twitter for things. If I'm done trading, I'm done trading until the next day. It's that ability to box it and put it in a different compartment that allows me to decompress from it.
And last question, for those who are listening who would love to learn more about you and your trading style, is there any way that they can contact you?
Well, one way is come into IU. You'll find me there on a daily basis. I'm also on social media. I do have a Twitter account under Corleone Offer, but I'm not I'm not active on there very much. Like I said before, I mainly use social media for to gauge sentiment and stalking good traders, etc. But I will eventually, every now and then I'll post something, or I'll share some charts. And I've shared charts in the past, and it's, maybe I'll pay more attention to it now. Like I said, for me, it's a tool. Social media is a tool.
Well, Stan, thank you so much for taking the time to be here and to chat with me today. I really appreciate it. There's a lot that we got to cover, so thank you so much.
Absolutely, Anthony. And again, thank you for having me. And, I hope and I wish everyone success.
If you liked this video, don't forget to hit the like, subscribe, and notification bell. Thanks for watching.